The following analysis is based entirely on public sources and is intended strictly for educational and research purposes. It is not financial or investment advice. Nvidia CEO Jensen Huang recently projected that the company's new hardware platforms will generate $1 trillion in cumulative orders by 2027. This chart shows the value of the global semiconductor industry in 2024. Total revenue across all companies combined sat at roughly $600 billion. Claiming $1 trillion in orders for two platforms is a staggering figure. To understand the logic behind this, we must look at the specific math driving the projection. The catalyst for this demand is the evolution from generative AI to agentic AI. Agentic AI refers to autonomous digital workers that continuously execute complex, multi-step tasks in the background without waiting for human prompts. This shift creates a new token economy. Nvidia calculates that if an enterprise pays a human engineer $500,000 a year, the most efficient path forward is equipping that engineer with $250,000 worth of AI compute tokens to multiply their daily output. Equipping a global digital workforce with continuous background processing requires an estimated 10,000-fold increase in compute power. That $1 trillion target reflects the hardware requirements of this massive scale. To process that volume of continuous inference, Nvidia moved away from selling individual GPUs to selling entirely disaggregated AI factories. Disaggregated computing separates resources like memory and processors into distinct pools connected by high-speed networks. Competitors are targeting specific vulnerabilities in this pipeline. Custom silicon startups like Grok use pure SRAM architecture. SRAM, or static random access memory, is a type of memory built directly into the processor that offers ultra-low latency, accelerating AI responses. Rivals build highly specialized components. Nvidia provides the entire integrated armory. They supply the networking switches, the memory, the CPUs, and the Dynamo operating system orchestrating the data center. This closed ecosystem allows for extreme operational speed. By testing and optimizing in-house, Nvidia recently pushed 7 new chips into mass production within a single year. They pair this execution speed with an airtight grip on the global supply chain, securing priority access to the world's most advanced foundry capacities to build those designs. Nvidia now functions as the overarching operating system for the global AI hardware ecosystem. The hard, uncompromising limits of the physical world define the actual ceiling to Nvidia's trillion-dollar dream. Immediate bottlenecks exist in manufacturing. There are severe capacity limits on TSMC's advanced CoWoS packaging, a specific method of stacking and connecting chips closely together to boost performance, alongside a global shortage of high-bandwidth memory. Beyond silicon, the industry faces a lack of electricity. We are seeing the exhaustion of the U.S. power grid, which cannot support the massive megawatt demands of these new AI factories. To bypass the grid, hyperscalers are deploying highly capital-intensive countermeasures, including building dedicated on-site natural gas generators just to power their server racks. The energy requirements are so extreme, tech companies are leasing entire nuclear power plants to guarantee their data centers can turn on. The desperate race to activate these sites has compressed construction lead times. To get around traditional building delays, the industry is deploying modular, pre-built data centers packed into shipping containers. Megawatt capacity, raw steel requirements, and physical infrastructure constraints have overtaken code and silicon as the ultimate limits of the AI revolution. For value investors, the next massive wave of economic opportunity lies outside the cloud. The capital is flowing toward the companies solving these physical infrastructure, cooling, and power generation bottlenecks. Tracking these macroeconomic constraints and evaluating broader market temperatures is critical for identifying where the money moves next. To track these metrics on your own, search and download the iOS app Buffett Indicator directly from the Apple App Store. For advanced research, market applications, and deep value intelligence, you can subscribe to our premium newsletter at deepvalues.ai. Make sure to follow our sister channel at Deep Values for deeper investing philosophy, and please hit the like button if you found this breakdown useful. The digital vision of a trillion-dollar AI industry now faces a mounting bill payable only in physical reality.